Good afternoon, everyone. This is Matt over at WallStreetLiveChat.com. Today is Sunday, June 23rd. We're going to take a look at a few stocks before the week gets started and review what we've been doing so far. Let's take a look at SPY real quick. This is our one of our biggest trades so far. We've been monitoring this in this area, waiting for the top to see where the entry was, and we picked up the entry on this hammer here and managed to use the relative strength index 14 and 5 with some other indicators to work our trades from down and up and down and up and down and up. The other day, of course, the Fed was nice enough to warn of some easing in the future, and it'll be top secret. Nobody will know anything about it. China has come in with some very bad data and some issues with the banks. Things are working out in our favor. The dollar is getting stronger. That means liquidity is drying up. So, what's next? Well, here we are now. We predicted up here, we said June, the end of June, we would be at 155, and you know what? We're almost there. We did have a trigger on Friday, which was fantastic, to grab some calls, and you could see here with this wick, with this hammer, that's a trigger for the upside. Okay, how high up? Well, we'll look at that in a second. But for now, what we did is it triggered during the day, off a 15-minute chart, and with everybody monitoring this in the chat room, we were able to pick the dead bottom on it and enter for some calls. So we're in some calls right now and predicting to the upside. It's oversold. It needs a little bit of bounce. This bounce was off the daily pivot on the daily chart. It was, I believe, support 1 is where it bounced off of this lower wick. But you could take a look at that on your charts to see. But up ahead we have some resistance, the 20-day moving average. His up ahead a little bit, 61 and change. Looks like 61. Let me try and get this a little closer here. Looks like 61.29, somewhere in that area. But you can catch it for a nice little pop. I don't think we're going to do anything spectacular to the upside, but we'll look for a reversal to the downside Monday after we get up a little bit higher. But as everybody knows who's been following us, that since the top, this was our first target, is getting this gap filled right here, and this gap has been filled. Okay, so what's next? What are we looking at? Yep, our next target is a downside target. Absolutely. We are in for a flip to the upside, but after that we will resume to the downside for the summer. There's a lot of stuff going on with the banks, a lot of stuff going on with the market, and we have another gap fill for the 144, and we are targeting that for the end of the summer. Before we get any kind of reversal, maybe dip down a little bit lower to the 135, 137 area for another gap fill. If you look over here, I have one more set up. It's going to be a nice trade for the summer for us. You're going to have swings. You're going to be up and down. There's going to be a lot of bouncing. So you look for these two areas here to get filled, and that's what I'm hoping for. You go 136 area, 137.50, somewhere in there. 142 and 159 has been filled. So one and done. If we're going to take a look at some of your potential trade zones, okay? Let's look at this here. Let's look the next drop down to come down in this area. So we're looking for a little bit of a trade area, of course lower now because we broke that uptrend, and I think we're going to stay, right in this area for a short time. Move this box over a little bit. I think we're going to stay right here, and then we're going to drop out of this box and have a heavy sell and come down into this box. Okay, so we have an ugly summer ahead of us. I mean, it's just set up for it. and you need to protect yourself and play what's playable. We had a beautiful uptrend that is not there anymore, and now that it's not there, we can be focused on playing the downs and the ups, because you are going to get the bounce. There's going to be many bounces. So right now what I'm seeing is we're going to come up a little bit tomorrow and test this area, and then I think we're going to get pretty ugly and maybe come down to the 152, 153 area, then bounce off of that. We're going to use these as support here, and then go from there. Plenty of room for droppage on this one, but be in the chat room and we'll call every entry, every exit right when we see them. Let's take a look at IYR. IYR has fallen out of the zone, and right now it has created a hammer on the daily. Okay, so it looks like we could pop up to 6660 area and then also head back down. But if you notice the cross, okay, a very aggressive cross. This has been a big move. You also had a cross here, and look what happened. All right, you had a cross here, and look what happened. So what we're trying to IYR, I see a little bit of pop, and then I see a redrop, and you're going to use this candle as support. You get a little bit of a gap right here that needs to get filled. So you look at the low area and down in this area, and then there's finally a lot of support down around right in this mid zone right here, 156. So there's plenty of room for the downside. Look for a little bit of an upside tomorrow. These are all dead cat bounces. That's all that's taking place. Do not get excited that everything's going back up again, because things are not set in motion to be going up. CRM, Salesforce. Salesforce has a nice candle. Looks good. Looks like we can come up and test a little bit higher. I don't know if it's going to head back down again. It's tough to say right now at this point, but looks like it's creating a bottom, and it has a nice little hammer on it. So we could get some upside. You have a little bit of resistance, well, quite a bit of resistance right where it is right now. If you notice, that's why the body of the candle closed where it did. You have this top, and this top, and this top, and this bottom, and this bottom. So you get a lot of resistance right here, and that might stop the move itself. But keep an eye on it. If it breaks that, we could head up to the upside, maybe test the 200-day moving average, and if it gets over the 200, then look for the 50 to resume. But the other area where basically where it could come up to is the 40. And here it is. If not, we are going to go down to the downside, and downside potential is probably right in this area here, 3450, and then gets lower than that. You're looking down in the 30 area, low 30. All right, what else you want to take a look at here? Dish Network. Dish has been rolling. It just hasn't stopped moving. And here we are now getting ready to break some nice highs. That's why we stopped. But it does have a sell hammer on it, so be careful with that. We could pull back down, find the support level before you go long, or you can short it now. You have support right in this area here. Okay, but you have these hammers. So keep an eye on the hammer. Hammer's down. If you look at, give you an example of that, you're buying on the paying attention to the 15-minute chart to trade Dish, then you were able to pick up this hammer here, okay, or this hammer here as bottoms, okay. So there's your hammer for a top. So expect it to come down and then head back up again, unless it breaks support. All right, so wait for a better entry, but it's just something to keep your eye on. DUST, one of our members trades this frequently. Whoops, that's close. Trades this frequently and has alerted some very nice moves on this one. The other day he called it over here on the bottom after these two breaks, and from 88 to 123 to 136 in 3 days. Big moves. So keep an eye on that one. Your relative strength index is high. I don't expect it to go up right now. I do expect it to come down. I do expect it to fill the gap, and this is the gap. Okay, to 104 area, and then move back up to the upside. All right, that hammer tells it all. The hammer tells you it's going down for a little while. The pressure's there. There's a nice gap. You have nice support. You have nice support right there, and then you have a little bit of support right here. Once we break this, then all we're going to do is come down to this side here. Look for if it breaks this, just for the record, come down to 88 to 96 again, because that's where your 50, your 20-day and your 50-day is, just sitting there. Your 200's way down here at 48, but it hasn't been down there. So just keep an eye on this one. And let's do one more, TTT. ProShares Ultra Short 20-year Treasuries. Well, I mean, this says it all. You have a hard candle right here. Nice job on that one, IYR, of finding that one. If you look at this one, you have a little bit of a gap that needs to be filled, but no big deal. There's some major volume coming into this versus what was being traded here prior to. If we look at on the outskirts on where we could go, see right here we have a little bit of a gap that needs to get filled on the 20-year, which is right around 100, and that's about $12 higher than where it is now. I do expect that to get filled. I think there's plenty of room to the upside. I think that candle is beautiful. I think the increase in volume is solid, and I think we could see another $12 move from there. If we take a look at the weekly on this one real quick, just to get an idea of extended out, you get the same thing. The 20 years was opened back in April 2012, and there you go. I mean, it's just that simple. You have this, and then you have a little bit higher. But I do expect, because you had that, here's that hammer. See the sell hammer? Pound, pound, pound. Okay, keep an eye on those. Hammers work great. You can learn hammers by being in live chat. You can catch them on the bottom using the 15-minute chart, along with RSI and a couple other indicators. Waiting for a 10 and a 20 moving average to cross over gives you a buy signal, and vice versa. We can teach you all that. With that, we're doing what we do to make money. That's all we're here for. The Dow. Take a quick look at the Dow, and then we'll wrap this up, and we will see you in live chat. Same thing. The Dow is coming down. Okay. Now the increased volume, I think we've topped. This is a nice hammer right here. There's more downside to come. I think we're going to get a nice, I think we're on the weekly, I'm sorry. This is the weekly. So, I think we can come up a little bit this week, and then we're going to resume down. You're going to get another hammer. This hammer tells you that we're going down. It's that simple. This hammer tells you we're going down. This hammer tells you we're going down. Okay? So we are coming down on the weekly. If you estimate a 15, how much are we going to move on the next week? Cut this amount in half, 14.66 to 15.2, somewhere in that area, $600-800, whatever. And we drop that again over in the next week or 2 weeks. You can see where we're headed and coming down to the 50 or the 200-day moving average. That will be your support to move to the upside. Here's your 200. Here's your 200. Here's your 200 bounce, okay? Here's your 200 bounce. It's pretty much written in stone what's going to take place, and it's very easy to read. And this is a weekly, so utilize the tools that you have. We are going to hit this 200-day moving average. It's that simple. So, work with it. Work with it with all your stocks. Plan your trades, and make it work for you. Understand what you're seeing, and go from there. Again, you had a wick, okay, just like the S&P. We're going to get a bounce up, probably going to hit the 20, and then reverse again. Okay, it's that simple. I mean, use the hammers, use your 15-minute chart, set your trades up, and plan to get in and out using your RSI, using the candles, the bodies of the candles as your wicks. All right, any questions? We will see you over at wallstreetlivechat.com this week for more fun and more profits, and they will get bigger. Peace.